have 20,000 people buying GameStop, 20,000 people buying BlackBerry, 20,000 people buying Nokia, 20,000 people buying Dogecoin, and 20,000 people buying silver. I think like the net effect is those stocks are all going to pump less than if they all focused on one stock and like solidified as a team. Like I believe Wall Street Bets is still rallying around GameStop, right? Am I crazy, or has that changed since the last day?
Dude, not much has changed with that. I feel like everyone is still kind of just split between whether or not GameStop is going to continue to rise or if AMC is the next train to all aboard. It's still a mix, man. Humphrey, what do you think the general consensus is like in public opinion?
Yeah, like I read a lot of Wall Street Bets just for informational or interesting purposes, but it feels like they're still GameStop holding the line, but the next biggest one is AMC.
Yeah,
and then like the other the kids are like Dogecoin, but it's mostly AMC. In the Discord, I'm in the Discord as well. It's mostly AMC that they're talking about. That's next after GameStop. So I essentially think because none of these stocks are trading on their fundamentals, it's now just a hype train. And if you want to get into, like for me, I wanted to buy more AMC on Friday because I knew that the movement wanted AMC. So I was like, okay, I'm going to buy some AMC. I'm going to take advantage of that. And I'll hold the line with GameStop, against the hedge funds. But if I'm just trying to make some money, I'd probably pour some money into AMC like you did, Brian. Yeah. And then Dogecoin, I just don't touch just because I don't think it has any intrinsic value, but I'm sure you guys already talked about that on this stream. But, in general, it's good to keep an eye on Wall Street Bets. Whether you're holding the line, whether you're trying to make a profit, just quickly, you want to see what the next trending thing is. And it's clear that the internet has some power here in actually moving stock prices. So that's what I would say.
Yeah, man. It's so funny. I never would have expected Doge to be blowing up like this, but what I've noticed is Doge has really become like the symbol of the people. I made this tweet yesterday on my Twitter, man. In Hunger Games, like Katniss had the Mockingjay, right? But Doge is like the meme, like that is literally the dog right there as the crest, the symbol of hope for the people. So it's just hilarious to see that people are making money off that, and it's hilarious to just see that it's Doge that we're doing. I think if it was Bitcoin, it'd be a different story.
I have a question about that for both of you. If someone's making money on Doge, that means someone's losing money on Doge. Is that right, or am I wrong on this one? Because isn't it a zero sum game with Doge?
I mean, at the end of the day, it's all like trading securities is a zero sum game if they're not if you can't back it up with cash flow and fundamentals, if that makes sense. But at the end of the day, right, like, do you think that someone who sells at 40 cents a share, or sorry, 4 cents a coin, I guess, but is still profitable, is a loser if that goes from 4 cents a share to 8 cents a share? Like, if you consider that a loser, then yeah, everybody loses. But unfortunately, I think what happens is when you don't have what fundamentals do is they give you a legitimate foundation of why something should stay a certain valuation. And if you don't have fundamentals ever, then eventually the thing will fall on itself, right? You kind of Icarus to where the fundamental value is. Icarus, the Greek thing where the guy flew too close to the sun. So that you get the same thing with like super high flying stocks. I didn't like Zoom Communications or Beyond Meat because their fundamentals were down here, but the valuations were up here. But with Dogecoin, like there's nothing, right? And so you're just where do you fall? When is too close to the sun? No one can predict that. It's just at some point you're going to get too close to the sun. It already went to 8 or 9 cents a coin, and now it's at 4. So a lot of people lost money buying at 8 cents a coin. And with AMC, the valuation right now, AMC is a little bit more like has a better fundamental story because it hasn't ripped as hard as GameStop has. I believe if I just look up AMC, right, the whole story around AMC is well, one, there was some acquisition story with Amazon possibly buying AMC, which doesn't seem to be the case, but who knows? But right now they're trading for a $6.2 billion value. So the market is valuing, $10 billion valuation. $10 billion valuation for AMC on zero profit because nobody's going to the movie theaters and basically very little revenue. But they made $5.5 billion in revenue in 2019, and they made $770 million in EBITDA or profit in 2019. So if you think that they fully recover in the next year or two and survive until then, which I think they have enough capital, and survive and don't dilute shareholders too much, then that means that gets you to like 800, let's say 700 million in profit. And the value of that kind of business on a relatively stable to kind of slowly dying kind of theater business is probably like 6 or 7 times the EBITDA or profit. So that values the company at like, I don't know, somewhere in that $5 to $6 billion range on a fundamental valuation basis. But that doesn't mean to say that this thing can't skyrocket much higher as long as the internet locks arms and pushes the stock, because it's a very heavily shorted stock. And what's going to happen is what happened with GameStop. Unfortunately, I think the rocket ships like GameStop aren't going to be repeated because the brokerages and the clearinghouses, and there's like OCC, which is an options clearinghouse, they're not offering the options that allow that second rocket booster, right? There are 2 rocket boosters. One's the first short squeeze, and then there's another rocket booster, which is the gamma option squeeze. But right now, no one wants to sell a call option to you, because if I sell you a call option and the thing skyrockets, then I lose my shirt. But so nobody's selling call options now. And if they are selling call options, the premiums are basically asinine. So I think you've lost one of the boosters going forward. Now, that doesn't mean that AMC can't go from whatever, $13 a share to $50 a share, but I find it hard to believe the thing's going to 130.
Yeah, I think the day to get in on GameStop was Wednesday, probably. If you want to buy a call option, Tuesday or Wednesday before all that crap happened, that would have been the best time. I personally bought a Monday call option on last Monday, and that did really well for me, but it expired on Friday. So it's interesting, the gamma squeeze too. Yeah, because now people are cognizant of it now, right? So they're gonna reduce that. The option writer is not gonna take that risk.
No one's taking that risk. And if I did a little TikTok about how like you can't, if you're a buyer, the call options are so expensive now because nobody wants to write call options and sell call options. And if they do, they're so expensive that you might as well just buy the stock, because if it 5Xs, the returns are basically the same, if not even worse. So
yeah,
just
everyone should
just buy the stock.
I think that was when GameStop was at 300 or something, and you were saying like it basically needs to triple for the same value of your call option, right? Or the same result of your call option.
And you only have 2 weeks. So if it's not above that in 2 weeks, you lose all your money. Yeah. Versus if you bought GameStop stock, you can, and it stays flat, you didn't lose any money. So it's just the better risk reward just to buy the stock at this point than the options.
How do you think this ends? Do you think that GameStop might actually offer more shares up and dilute the shares out, or what? Like, do you think that's a possible option? Because that's one of the options I've heard of, actually, is perhaps GameStop just starts to offer more shares.
If I were them, I would, right? As a publicly traded CFO or CEO, what you want to do is when your stock is very highly valued, I'm not going to say overvalued, but if you think the valuation has gone above maybe where you're comfortable, you should probably sell shares for cash, because that means that you dilute shareholders less for more cash, because it's just like, right, the more expensive your stock, the more money you can get for the same amount of stock, if that makes sense. Yeah. So I would, and that would give them a ton of money to go build whatever they want, which is e-commerce for video games. But I still don't understand how they're going to displace the Xbox Gold Store and the PlayStation Store, Sony PlayStation Store, and Steam. Like, I just don't understand. It's not a money thing. It's like, if I'm an Xbox player, I'm downloading through the Xbox Store.
Right.
So I never
right.
really understood how they're going to Chewy this. Like,
Yeah.
sure, maybe they Netflix it and send you discs, I guess. But if I were them, like honestly, I think you try to do the e-commerce thing, and then you maybe double down on the popularity of collectibles like Pokemon cards, and you like kill everybody in the Pokemon online e-commerce world. But I don't know.
So let's say they do offer more shares. What happens to what? Do you think that is one pot? So let's say they did offer. I don't know. Let's say they started to offer. How many shares are outstanding? Like of GameStop, like 80 million. I don't know what it is, but let's say they offer like another 20% of what their total shares are. What happens? The price goes down a little bit because, there's the same amount of demand for more shares now, so price goes down a bit.
Well, no,
or
I mean, I think it's a push and pull.